Hey guys, Collette Horton. We are about to get really nerdy today. So if you are a buyer's agent, you have a client that is buying a home from someone that has an over-65 exemption, or if you are a buyer and you are buying a home where the seller is over 65, this is for you. Now, I am rounding numbers to make it really easy for math. This is not what it's really going to look like, but the formula works. Let's say you're buying a house that is valued today at $600,000. So you're buying this house, $600,000. You were the buyer, you were under the age of 65. Seller, over the age of 65, their taxes were frozen at $300,000. So current value $600,000, their taxes were frozen at $300,000. Now let's say, just for math, that their taxes are $300 a month, but your taxes are $600 a month, right? If this were heaven, and that's what tax rates really were, but you know they're more than that. Let's say you were closing in May. So let's say seller owes $1,500 in taxes for their portion from January to May. Now, when does the buyer start paying taxes? The buyer starts paying taxes from January 1, even though they're buying the house in May. How is that possible? Because tax bills come out at the end of the year and they're paid in arrears from the beginning of the year to the end of the year. So at closing, all lenders collect taxes from the buyer at the buyer's rate from January 1 through the date of closing, and more if they have an escrow account. But let's say 5 months, $600, $3,000. I'm collecting from the buyer, right? Now, I'm getting a credit from the seller on the back of the closing disclosure where we get credits. So I'm collecting in the front, I'm getting a credit in the back. But the seller is going to credit what they owe, because why would they pay more than what their taxes are? They actually are being currently charged $300 a month or $1,500. So at closing, what ends up happening is the buyers in this scenario have to bring an extra $1,500 to closing because they're responsible from January 1 on, and the sellers have given them a credit at closing at their tax rate from January until the date of closing. So this number can end up being $3,000, $5,000, $7,000 in discrepancy based on the value of the home, based on what the value was frozen at for the over 65 and what the new value is that our buyers are buying at. So is this fair? No. Yes. Is it fair for the seller to pay more than they actually owe? No. But is it fair for the buyer to have to make up that difference? No. So it's a negotiation point, and it's one that not a lot of people actually know to negotiate on. So how do you fix this in a contract? Now, I am not a real estate agent. I cannot give real estate advice. Go speak to your broker and find out the legal way to do it. But how have I seen it being done? They write in special provisions. They write somewhere in the contract that the taxes that the seller will credit at closing will be based on the buyer's tax rate. That makes this go away, because then the sellers are giving a credit at closing based on the buyer's tax rate. This January, it's not that big of a deal, but you get into October, November, where the sellers are crediting you at their tax rate and you're at the end of the year. What if it's a $1,500 a month discrepancy? Those numbers can get huge. So it's not that it's fair to either party, because technically it is and it isn't on both sides. It's a negotiation point. It can be negotiated, and it should be negotiated. The sellers have over 65 exemption and the buyers don't, and you're in this kind of scenario. All of a sudden we get a closing disclosure the week of closing, and there's this huge discrepancy in the numbers and the cash that someone is bringing to closing. And then people start talking about it. If you have a question on this, let's chat.